are ready to win with us. GAN Markets.
Hello everyone, this is Jim from Dado Finance. Welcome back to our channel. We are with you on 5th of September, opening the week video. Alright, on this video we will just cover some news first, then we will just go ahead with our charts. Alright, this week is important for ECB because they are making the second rate hike in the 11 years. So it will be in different times for Europe in the coming days. So the problem right now, ECB is just raising the rates, but also they are just signaling that this is for some countries, not for all European countries. For example, let's say Italy is just interest rate rising there and then fast, and 10-year bonds are just rising fast because of the expectation of the next Greece can be maybe Italy. They have a lot of debt, and then they have some crisis. They have a political crisis. They have a population crisis. Blah blah. But the risks are there. That's why they just investors are not trusting them. So they just say we don't risk these money with so low interest rate. So who's risking? ECB is risking just to keep European Union safe and reliable. That's why. And even interest rate hikes is for only some basic countries. We can say for Germany, we can say for France, Netherlands, Belgium, something like that, and the rest will be supported by ECB mechanism. All right, that was the news. That was the expectation of the week. We will have balance of trade in US. With strong US dollar, we may see another record level of imports, and because the other countries currency is just devalued, so they can just buy more. But at the same time, we can see really high exports. Reason is LNG, natural gas, and oil exports. That's why it can go higher. Both of them can go higher, and then there may be the same level of balance deficit, trade deficit. All right, so it will affect the market that much. Our first chart, we are starting with our first chart. It's dollar index. As you can see here, dollar index has just tested 110 level, and right now it's on decline. It will just struggle some in here. It's quite obvious, but as you can see, step by step, it is rising. It's just struggling on 180, 190, 108, 9, and 10, and with the risk just pouring in these days, it will just test new high levels. It seems like that. So that means weak point for weak days for Euro, GBP, and Japanese yen are on the way. All right, let's look at our second chart. All right, our second chart is gold. As you can see here, gold has declined below 1,700 level again, and then from that level, 1,700 level, it just rebounded again. So the main problem is similar to this one: rising 10-year bond yields. So as they rise, they are investors are selling gold and silver, and then they are buying those bonds. And right now, with those rising 10-year bonds, it has declined, and from these level we have seen a rebound, but not like this. Still we are just low. And let me just show you something. RSI is right now is 50. So when RSI is 61, the price was around 1764. right now 17.50. So when it just like it hits 17.25 or something like that, RSI will be at the same level. So it will probably, most probably, and when it just reaches to 17.33, it will be overbought in the overbought territory. So a rejection is possible. That's why 10-year bonds are really just stealing the show of gold and precious metals, even in this wartime. What happens if it cannot hold in here? It will decline first 1700, then if it cannot hold there, it will decline to 1675 level again in the short term. That's the expectation. All right, let's look at our last chart. All right, our last chart is crude oil. As you can see here, crude oil prices, US oil prices are just testing a level, and it's been rejected from that level a few times. It has declined from 97 levels to 86 level. $11 decline in just, as you can see here, and end of August and September, in just 2 days. It has lost that value in just 2 days, and it just like it closed August in loss. So another month, another hopes it's starting, but the economies are just slowing down. A lot of problems are just brewing in countries, especially in China, one of the biggest oil importer in the world. There are a lot of problems. First one is slowdown in economy, because they are really insisting on zero COVID policy. They are just shutting down a lot of cities. So this is affecting their consumption of oil. So right now they still buy that one, but if they say, all right, we have enough oil, so we will just slow down buying, then we will see the real decline in oil prices. Another thing is US oil prices are just like declining because US shale producers are just benefiting from these high level, and then they are just keep pumping at record levels, really record levels, and then they just want to compensate oil in Europe. That's why we see that one, and we may see some more decline in the term, especially at this level. Definitely, if it cannot pass just like this, another sell-off, $3 sell-off is possible in US oil. Thank you so much for watching us. We will be together on more news. We will cover more charts with you. Have a nice and profitable day. Bye.